Friends, good morning once again. This is also for the benefit of all our friends and viewers on YouTube. Uh, Thank you all for joining. This is the Multimillionaire Forum, as you know. What we do in this forum is that we bring a topic of relevance in the financial space or a topic that concerns the financial space, and we bring this topic to you every month on the first Saturday at 11 a.m. And as you can see, today is the most pertinent topic. I mean, today is the last day of our elections, and we will soon know the results on June 4. So we thought it's just most appropriate to talk about the connection between elections and the stock market. So again, just in continuation of the Multimillionaire Forum, please feel free to engage with us, spread the word around. This is a education initiative from our company. It's absolutely free of cost. We don't sell any products, so there is no obligation for anyone to feel obliged that they have to do any sort of business with us. It's just purely knowledge sharing and learning from one another from our experience. Right. So let's get into this this little small presentation that we've prepared. It's very, very interesting. We thought we'll bring out the data for you in terms of exactly what happens. Where is the connection? And we hear so much of news. There's so much of noise around what's happening. But then why not actually figure out precisely and exactly what is happening in this exact space? Right. So now, having said this, we'll just do a little disclaimer first in terms of what this content is all about. It's a compliance tool that there's no investment advice being given here. There is no sort of product recommendation here happening. And of course, whatever we discuss, we can have our financial advisors commenting us on that. We will speak for about 20-25 minutes right now while I'll present some data to you, and after that we will have questions. Okay. So sorry. Put up the presentation again for us, please. So, bull market, bear markets, and the kind of information that's coming out, the exit polls, which are going to start from today, all these things put together either serve two purposes. Either they make us extremely convinced about what we think is going to happen on one side. On the other side, what happens is we tend to get nervous about what the outcome might be, depending on where our investments are. So, for example, if we have a lot of money invested recently in the stock market, and then we feel that all these negative news are coming through, the ruling party is so positive and they are so strong, they are so gung-ho about the fact that they will not only get a majority, but they will get a majority by a huge margin. In fact, our Honorable Prime Minister has said that they might even cross the 400 tally. Now, that is, public news and information for all of us, right? But how does this exactly pan out, and what really happens, what doesn't happen? We thought we will go back the last 25 odd years or so and bring you some very interesting facts from the history of the Indian elections, and then sort of corroborate that with what happens to the market movement based on the outcome of elections. So there is a little spreadsheet that we've prepared for you, and I'm going to take you through that spreadsheet. Here it is. So can you just focus right in the center, please, on the yellow table first? Friends, just be with me on this one. Okay, can you zoom a little bit? So can you make it a little larger? Okay, so that, you have the yellow frame right in the center for everyone to see. All right, okay, that's good. That's good. Thank you. And just sort of roll it up a little bit. It's too much. Okay. Bas, this is perfect. Okay, this is perfect. So friends, what we've done here is we've given an analysis, or if you like, a little bit of a summary of the last few years of our election. Okay, so if you see, this is the current status. Okay, 4-6. So Zarir, if you can bring the Sensex value at 73,000, that is where we were as on yesterday's market closing. So that's, we've written 4th of June, but actually the date today is 1st of June. So we don't exactly know where we will be on 4th of June. And when that happens, we'll update it. But see, what's pertinent is to understand that 5 years back, where were we? At the time of the last election, the Sensex value, as you can see, was 38 11. That's exactly where the cursor is. And if you can just hover your cursor around there as well, so that people know what number you're looking at. Okay. So as we can see in the last 5 years, from the last election to the eve of this election, we are up by approximately 93%. Zari, can you see my cursor as well? Okay, very well, fine. So we'll go with your cursor. So 93% is where we can see that we've grown in the last 5 years. Okay, in the same way, what happened is the election before that, which is in 2014 to 2019, from that day of election to the 2019 date of elections, we were up 62%. Okay, the previous 5 years, again, from the time where BJP and the NDA alliance actually got into the government the first time, which is around 2014, in the recent 10 years, in that time when they started this current last 10-year term, that time we were at 22,122. Now, but the interesting thing to see is that the time period before that, the 2009 to 2014 period, which was the time of the Congress rule, from that period to the BJP's rule starting in the BJP government starting in 2014, again, the market went up 67% in that period. Okay. Now, we go back yet another 4 years and we go to 2004 elections. So from 2004 elections to 2009 elections, which was again, incidentally, INC, which is Congress was the leading party there, the market went up almost 3 times. Okay. See, this is interesting, isn't it? So from one election to the other election, the market has at least gone up 60% to 100%. And in this one instance, between 2004 to 9, it has gone up 300%. So what does that actually mean? Okay. Does that mean that, the political parties are doing something by which they are making an impact, they are making a difference on the way stock markets are moving? Is it their policies which are doing it? Or is it some other force which is playing? Is it some geopolitical activity which is happening around the world? Or is it that, the economic developments that are happening not only in India, but across the world, and the trade that is happening and the business that is happening and all of that, that is actually also motivating this kind of a movement to happen? I mean, what is it? Because from the stock market history that we just showed you, it's very, very evident and clear that every time 5 years elapse in the last 5 years, and see, we didn't really speak about the time period before 2004. I mean, there was 99 to 2004 was a fine 5-year period with a stable government. But between 96 and 99, we had the government that changed thrice, and it came in for a very short period of time. So we will not talk about that data. We want to talk about a stable government where it at least ran for about 4 to 5 years. So it is very, very clear that whether it was the Congress or whether it was the BJP, it did not actually make a difference to the market. The market actually moved because of some other factors. And that is what we found during our research. Okay. So can you put up that spreadsheet again? Now, see, what I'm going to do is I'm going to take you in the past, in the history, and simultaneously in the future of every election. Okay. So now, see, if we look at the election time of 2004, so come to that figure where the index value was 4,505. Okay. So at the eve of the 2004 election, 17th May 2004, the index was at 4,500. Okay. Now, what happened in the 6 months before that elections? If you see, the markets were continuously in the negative, which is what is shown by the big, red block that you have in front of you. Okay. Now, why was this the case? Was it something to do with India? Was it something to do internationally? If you remember, 2000 was the year of the technology crash. Okay. And thereafter, in 2002, we had the terrorist attacks in America, the Twin Towers that were attacked. So because of that, there was a general fall in all global markets across. After that fall happened, there was a recovery period between 3 and 4. So if you see in the 1 year preceding, which is from May of 2003 to May of 2004, there was a 49% or 50% jump in the index value. So you see, this very shortly, we will see the other world markets also. Okay. this is the history of 2004. Now, let's look at the history of 2009 election. So we think by data, we can say that, Congress came to power in 2004, and in 2009, as you can see, the market went up 3 times. Can you just highlight those two numbers, please, so everybody knows what we are following? The 4,500 to 14,302, those two numbers, okay? So the market, the index tripled. The index tripled means individually stocks and mutual fund would have gone up 4 times and 5 times, okay? But why did this happen? Look at the date here. The date is 16th of May 2009. Now, 16th of May 2009 is exactly 1.5 years from the mayhem that started in 2008 January in America, where the housing market went for a bust. And, all we know the history, the housing market collapsed, and Freddie Mac, those two financial institutions had huge amount of NPAs, and there were loans that were not recoverable from the American populace who had borrowed and who were given loans without even having credit eligibility, etc. And then we had the Lehman Brothers and large firms like that collapsed in the later part of 2008. So if you remember the history in 2008, from January till October, the market was just going down all the way, okay? And thereafter it recovered. So this was the recovery period. So is it that something Congress did? So Congress can say that in the last 5 years, if we were in 2009 today, Congress would say that, in our last 5 years, the stock market has tripled. But is it really because of what they did, or is it because of some global phenomenon? So the answer is there in data. So if you now highlight those 3 green blocks there for you, you will see that in the 6 months preceding 2009, May of 2009, there was a recovery in the stock market, not only in India, but worldwide, across the world. And as a result of which, there was a massive appreciation. So between people who invested, let's say in 2009, in the first 6 months of 2009, I remember very clearly a lot of people, do tax-saving investments where they put into certain tax-saving products of the mutual fund industry. And I very clearly remember that in 1 year, everyone's profits had, pretty much gone up to 100% plus. So between 2009 and 2010, the markets went up because of the global recovery from the crash of American crash of the housing market. And as a result of which, everyone made a lot of money. So literally speaking, if you kind of analyze this even further, okay, Zari, select these two numbers, 4,500 and 14,402, very significant period, and which is why I'm focusing so much of time here. Remember that this market went up 100% around that time. So which means if you reduce that 14,000 number by half, then that means the number stands at about 7,000. So which means pretty much the 4 years from 2004 to 2008, the market hardly moved up by about 50-60% in terms of this particular rally. And the major rally happened in the last year. So what happens, the ruling party suddenly can wear the crown that, maybe we did something, and as a result of which this happened. So conclusion really out of all this is that, is it really the political parties that are deciding the fate of what happens to investment, or is it something else? So the answer is quite clear. Now, can you go into the future side, please? I want to show you some data on the future side, okay? Now, these are, what you see here, this table is 1 month, 3 months, 6 months, and 1 year ahead of that political party coming into power, okay? So what do we see in the last so many elections? Can you select from, cell K5, which is minus 1% till the current one? No, not horizontal, vertical down. Okay. Yeah, thanks. So you see what you are seeing here, what you see in your screen here now, okay, is the fact that the moment this party came, so when BJP came into power, when Vajpayee ji became the prime minister in 1999, when he came to power, what happened in the next month, 1 month of that political party gaining the government, or being, having the majority of running the government? In the next 1 month, the index was down about 1%. Okay. Similarly, in the next few years, in 2004, when Congress came to power, the markets was up 9% in that 1 month period. The next time Congress again came to power, it was 5%. And the next time BJP came into power in 14, the markets moved up by 5%. And in 2019, when the Modi ji's government had the second run of their tenure, okay, which was on the back of 5 fantastic years that they delivered previously to that, okay, the market actually went down 2%. So, see, market has its own method and style of moving, right? But what is very interesting to see is that if you take the average of this entire 1 month performance after this new party comes into power, after the election gets over, on an average, uski zarurat nahi hai, yahan pe niche likha, the average is 4.91%, which means in the first month of a political party coming into power, based on the history of the last 5 elections, 2 times it was no returns, and 3 times there was return of 5% plus. So, by law of averages, we might assume that either we will be at zero or we'll be at 5% plus in the next 1 month of this new government taking the office in the parliament, whether it is the ruling party or some other party or some other coalition. So that was the conclusion that actually came out of this data, that it doesn't really matter. In the same way, what happened in the next 3 months, or 3 months after the particular party got into power? What is the average return of the last 5 years? 1.76%, which means in 3 months also there was no significant impact. In fact, the impact was quite negative in 2019. The markets went down 10%. And when the same BJP government under Vajpayee ji came to power in 1999, as we can see, in 3 months, the markets were almost up 20%. Okay, the same pretty much happened in 2004. Congress came to power, market went up 16% in 3 months. No particular logic or anything. But again, remember, there was some global events happening, and as a result of which things changed. It wasn't really anything to do with the government. I think what we realized from this is that government that comes into power or goes out of power has an immediate short-term impact in the market. So, for example, in 2009, what happened is, just go to that number of 5%, 5% number of 2009, 1 month, K7. Very interestingly, I don't think a lot of people would remember, in 2009, the day this Congress government under Manmohan Singh, and where the finance minister was Mr. Chidambaram, when they came into power, that particular day itself, the index went up by 5%. I mean, it was stupendous. It was like an amazing sort of a thing that happened, which has never happened actually, that, the index just goes up so much. Because when index goes up so much, you can imagine everything below also really flies up. Okay. So what we are seeing as a result of this table is that, can you remove the presentation, please? Can you? Okay. So what we're seeing as a result of all this data is that political parties or their rules have, or their governances or their policy measures have an immediate short-term impact, but not really a very long-term impact. Now, what we'll do is, we are going to extend this study a little bit more, and we will go into further data to see what happened around the whole world. So can you take us to that one, please? So very quickly, I'm going to share some screens with you. This was a presentation which was, which actually circulated quite far and wide, even on WhatsApp. And this is developed by a company called Muresh Tech. They are technical analysts, and so all credit to them, and thanks to them for compiling these pictures for us, and which I've pulled out some pictures from there, just to basically show you what happened in India and what happened again, globally. So this fact gets really established in our minds. So this is 2004. BJP basically lost the election. Congress came into power. But what happened in the period, remember, this was a very bad period of sorts, because the entire markets went down. Not only did our market make a down move in that May of 2004, but the world markets also did that. So can you just move to the world markets, please? Next slide. So as you can see, Dow Jones. See, the interesting point is, look at the down arrows. We've highlighted, there are these red arrows that are highlighted. Don't worry about what's written, but visually just appreciate this, that this is the Dow Jones American market. Then you have the French market, which is CSC. You have the English market, the British market, FTSE, and you have DAX, the German market. Okay, all four markets, a uniform slide down. Everyone broke down. at around the same time. All global markets basically moved together. So remember the talk about when we said that all global markets are moving up together or down together. Please move forward. Let's talk about what happened in 2009. Remember 2009? What happened was this was on the back of the housing crash, right? The housing crash just happened in this huge red arrow that you are seeing down from a period of 2007 to 8. And then obviously there was a subsequent run up. So it didn't have anything to do with any ruling party. Whoever would have come into power, the markets had to go up in 2009. So it was not something that the Congress did, and which is why this happened. But it just happened because of a recovery in the markets, generally speaking. Okay, so please move forward. And this exact same down move from in 2007-8, and then a rebound up move happened everywhere. And these are some, again, indices for your reference, whether it's Nikkei, Dow Jones, Taiwanese market, the Hong Kong Chinese market. Everybody exactly had the same diagram or the same reaction. The whole world markets went down, they all came back up. Okay, and other markets which we are not shown here, which is the French market, the British market, pretty much the same result. Okay, move on. Okay, 2014 to 2019, a very interesting period. This period saw a lot of activity. In India, we saw demonetization, we saw the implementation of GST. Okay, the world across also saw, Donald Trump coming in and winning in the election in 2016. So there were lots of events that happened globally as well as in our country. Okay, and this was actually the starting term, the first tenure of Modi ji's government. Okay, so again, you can see here everywhere this market in this 5-year zone was like a sideways market. It went up, went sideways, went up, went down, that kind of a thing. Or it was in some sort of a band, in some sort of a rally. As you can see, the American markets down, Dow Jones, is exactly showing you that it was into a particular narrow range. The Indian markets were just moving up and side and up. Can you just follow your cursors through all of that? Okay, please go to the next one. Yeah. These are some more studies exactly from some other markets. Everywhere it's doing the same thing. What we have marked here in reds and here is for your reference to see that the markets went up, down, up. So it was like a sideways market. It was not exactly like a huge move. But if you look at it from point to point, from 14 to 19, what I showed a while ago is that we actually moved up about 40-50%. And that's what happened in 2019. Move forward to 2019 elections. Now, 2019 elections, of course, in our country, BJP came into power, Modi ji's second term, and this time Nirmala Sitharaman was the finance minister. What happened here? We all know in 2020, the whole world was under lockdown and, the markets went down. This is in the last 5 years, so it's pretty fresh in our memories, right? But despite everything, we had a very hard time, right? Go on, look at the world markets, please. Next one. See, everywhere you can see that, whether it was the FTSE or the Hang Seng or the American markets, everybody was moving sideways. That year of 2019 to 2020, everybody was more or less on the side. Okay. And what happened after that is that in that period of 2020 till 2023, okay, we saw that the world faced COVID. The entire world markets crashed in 2020. Against everyone's expectations. And here we saw one more very interesting fact, that all the world experts turned out to be completely wrong. Nobody really knew what's going to happen tomorrow and how long is it going to take to come out of COVID and what's going to be the result and the impact of that. But to everyone's surprise and, positively surprising, the markets actually recovered in pretty much 6 months. It was as fast as that. So COVID came, markets fell, it just bounced up really fast. And after it bounced up really fast, we saw a very, very difficult period between 2021, that is after the second lockdown, till about 2023. So from 23 to 24, actually the markets had a fantastic run. All the mid caps, the small caps pretty much went up by 50, 60, 70%. So a large part of the market appreciation in the last 5 years actually has happened in the last 1 year. So it happened in the period of 2020 to 2022, and then from 23 to 24. Beach mein, for about a year and a half, it was quite a lull. So that's how we are standing today on 100% appreciation, and all, to my mind, because of global factors. And which brings us to a very, very important conclusion. Do political parties really affect the outcome of an election? Beg your pardon. Do political parties' outcome on elections actually affect the markets around the world? Based on data, I am inclined to say no. Markets are having their own movement, and markets are doing their own thing. It's based on, yes, economic climate. If the government provides a climate, and we did say this in a couple of our previous sessions also, that it is the government policies that support business and support development in a country, and as a result of which country prospers either at a higher pace or either at a mediocre pace, or goes really slow if the political climate is not very stable and it's kind of adverse for business. But the activity level in the economy continues to happen. Markets move, and they move based on profitability of companies, and profitability depends on the environment that is actually offered by the ruling government to the businesses, and what is happening internationally in terms of trade, commerce, and geopolitical relations. So that basically is what the deciding factor of the market is. So if we are concerned what is going to happen, whether the ruling party gets a major majority, I mean, if it actually becomes 400 par, very clearly we might see the returns that will happen probably in the coming week will or might be like the averages that we saw in the last 6 elections. We might be at 5 or 10% plus over the next 1 week to 1 month, right? If it does not happen with a majority, we might be at a 0 to 5%, somewhere in that range. Okay. If for some reason the ruling party does not get the government again, then we might see a little bit of a knee-jerk reaction, because people's expectations might get marred. But at the same time, the business environment and the political development, the economic development, and the governance that has been set for the last 10 years cannot be reversed. For example, if Article 370 was abrogated, suddenly that cannot be changed. What you can do is you can stop a metro project from happening, or you can delay the metro project from happening, what we saw in Maharashtra some time ago, because of the change of government. But you cannot cancel it. You cannot today cancel and reverse GST. GST was a landmark measure that happened in 2017. You cannot undo that. So there are a lot of policy measures that are sometimes implemented, which are very difficult to sort of reverse. So that's my submission, really. Can you bring the presentation up, please, again? So, friends, I don't think there is a lot to worry in terms of exactly what is going to happen. Please move forward. Okay. Markets typically, most of the times, move according to global trends. They do their own thing. Okay. Now, see, very interestingly, when I say this, and in a moment, I'm going to show you some more pictures again on this on this area as to what's exactly happening in 2004. Please carry forward. Please move on. Okay. The likely future trend in 2024. Continue, please. Let's just look at this. Very interesting. You see what's happening in the Indian economy. Can you switch to that PDF thing? Can you change your slide? World across, something very interesting is happening in 2024. See, remember I said that a while ago that in the last 5 years of COVID, we have actually seen that the markets really went up from 2020, somewhere around June, to about 2021 of November. So 1.5 years, the market did fabulously well. Okay, after crashing from 2020, in 2020, it crashed from March until about June, July. It recovered from there and went on till October 21, 1.5 year. It did fabulously well. October 21 onwards, again, it started going down and sideways for some time till March of 23, and March 23 till March 24, pretty much, most of the money is doubled in that period of time. But not the index. The index did double, but a lot of indices, the sector indices and the small caps, the mid caps, and all of them actually shot up. See what's happening in 2024, beginning from January. We are talking about the calendar year now. Please carry forward. Let's look at what's happening. Dow Jones. Dow Jones has actually gone into a new territory. It actually went and made new highs. Okay. Move forward. Go to the next market. Okay, the American market has moved up. Very interesting. Please pay attention to this thing from Moon. Okay, so Nasdaq is also broken new highs and has gone forward. Okay, next S&P 500. Next, okay, this is the German market. Are you friends? Are you noticing what has happened? Is all markets are at an all-time high. All markets are at their new 52 weeks high, or they are crossing into new highs. They are all becoming all-time highs. Okay, so German market is also in that same space. French market, again breaking highs and like all-time high markets. UK market, very interestingly, 6 years it was in the same sort of a zone, and the UK market is FTSE is also sort of broken out, and it's now in an uptrend. It is breaking new high, breaking the old highs and making new highs. Okay, so FTSE is more, there's bullishness in FTSE. Nikkei, after so many years, after 35 years, it has actually come out, and Nikkei is also, the Japanese market is at a new high. Okay, move forward, please. Hang Seng, move forward. Hang Seng is also breaking out. See, Chinese market, okay, very, very interesting. Chinese market, okay, and Shanghai market and Hang Seng market is a representative of that. So for so many years, right from China's policies on COVID and whatever we've seen from 2020, China actually is at an all-time historic low. It is at such a low that it's probably, the kind of low that we very metaphorically speak and say that it's time to sell the house and buy the market. So China is at that kind of a low. What will happen on China? I'm not an expert on China, but basically what I am a little in the know of is that Chinese market today is at a multi-year low. So this is the lowest it can possibly go. The P ratio of the Chinese market is 10. It's the lowest that is ever possible. Generally, markets fluctuate between a band, you see, of a lower band of about 8 or 10 P, which is the like lowest. It has never gone below that. And on the upper level, the markets are at something of maybe 25, 30. So you can imagine, how attractively valued investors around the world, global investors, might find the Chinese market. Okay, move forward, please. Domestic trend. Let's look at what's happening in our India. So in India, again, see, we are also sort of going to new highs, as you can already see and as you can already read in the newspapers, that we are going to new highs one after the other. Okay, so we're going to new highs, but we are sort of sideways. We have not really, like the other markets, actually taken off and gone into like a complete rally of sorts. We are not into that zone as yet. Okay, our corporate profitability is very good. We are standing on the back of very, very good fundamentals. We are standing on the back of government companies doing extremely well. We're standing on the back of India, which has emerged as a major arms producer and an exporter of arms and ammunition and defense equipment. So we are not only making it in India, doing our own thing, but we're exporting to the world. We are standing on the back of infrastructure, which has pretty much doubled. The number of seaports have doubled in the last 5 years. Airports have doubled. Tourism has gone up. Commute has gone up. Luxury spending has gone up. Discretionary spending, non-discretionary spending, everything has pretty much doubled or tripled. Okay, we are seeing record sales of luxury cars. We are seeing record sales of luxury apartments. So every section of the society in India has, in some sense, got upgraded in the last 5 to 10 years. So which means at the lowest level also, his net worth has probably doubled. And at the highest level, the net worth has gone up at many fold for our Indian market. So that is the kind of backdrop that we are standing on. And which is why I think going forward, whichever government comes in, my friends, I think India is standing at such a junction point where business is thriving, activities are as robust as they could be, growth is unstoppable. We have a great young population. There are thousands of startups happening, and there's a lot of money flowing right from startups to established companies, companies who are raising money in the stock market, to companies who are doing right issues and things like that. There's a lot of consolidation also happening. There's a lot of action happening in the corporate space. So my submission is, irrespective of whichever government comes, we all know mostly what the answer is going to be. And it's not very far away. It's probably just about 72 hours, 3 more days exactly from now. We are at about 11:40 on 1st of June. In 3 days' time, 72 hours, we will know exactly. We'll have a pretty good idea about what's happening. So my sense and my submission really is, don't be waiting on the sidelines. Okay, whoever comes to power, markets move based on political, economic, and trade environment. We are at a very, very good stage. We have emerged as one of the most powerful nations and the nations with the highest amount of progress and growth over the last decade. And the next decade also belongs pretty much to a country like India for various reasons. And I can speak about this, as you know, for hours and days together. So, having said that, I want to close my formal presentation here. I hope you've enjoyed it, and